Hello traders. So far we talked about trends, market direction, and the top-down approach. So now it's time to actually build a swing trade. So let's talk about the 5 elements of every swing trade. Okay, first of all, we need to answer 5 questions. Number 1, where am I entering? Number 2, where am I wrong? Number 3, where do I take profit? Number 4, how much am I risking? And number 5, how much can I realistically make? If you're missing one of those answers, you're not putting on any trade. Okay, let's use a real stock for our example. The stock is ABC. Change the name, but it's actually reflecting in the chart a real stock. We're on the daily chart. The market context is bullish, so this means that we check the S&P and the Nasdaq, and they're bullish. The sector in which the stock is the technology sector, which is also bullish, strong, so that's good for us. And the trend characteristics of this chart is we have higher highs and higher lows, and the price is above the 20 SMA and the 50 SMA. So let's practice our entry on this stock. So this is step 1. Entering is the first thing you decide. So ABC is trading around 180 up here. The entry plan would be the break of this ascending base. So if the price breaks above this 180, breaking this ascending base, and goes to 182, we enter. So that's our entry, 182. Step 2, we decide our stop loss, where the trade is wrong. So in this chart, we're going to use previous resistance that becomes support, more or less when the 20 SMA is at 177. And that's going to be our stop loss. So it means that if the price breaks below 177, the trade idea that we had is invalid. Let's move now to step 3, the target. We need to try to choose a realistic profit objective. So we can use a previous resistance. We can measure the move that the stock is usually doing. In this example, we decided that our target price is 190. Sorry, the typo here is 190, like here on the chart. So the target must be realistic based on the structure and not based on your personal bias, your idea, or even worse, on hopes. We're going to do other trades in other lessons, and we're going to choose our target based on volatility, ATR, and so on. But for now, let's just say that we decided, or from previous resistance, or because we measure the usual moves of the stock, that our target is 190. This takes us to step 4, which is the risk calculation. So we have our stop loss in 177, our entry in 182. So it's very easy to understand what our risk per share is. We just need to subtract from 182 our stop, 177. So we have $5 of risk per share. After we've been calculating the risk, we calculate our reward. We know that our entry is 182. The target that we chose is 190. So the target, 190 minus 182, our reward per share is 8. Pretty simple. After knowing what our risk is and what our reward is, we can calculate our risk-reward ratio. In this case, with a risk of 5 and a reward of 8, we have a 1 to 1.6 risk-reward ratio. This means that we can be wrong more often than right and still grow our account, because our reward is bigger than our risk. And that's what you usually want to have. One thing that we didn't calculate yet, which is our position size, so how many shares we are buying of the stock. In this example, let's say we have an account of $10,000 and we decide, based on our trading plan, based on our rules, that our risk per trade is only 1%, so we're risking $100. We just need to make a division between 100, which is our risk per trade, and our $5 risk. So in this specific trade, we can only buy 20 shares. Let's wrap it up and just understand that swing trading is a process. So we're not gambling here. We're using actual calculation. Our risk is defined. The reward is defined. We know our position size and we remove completely the emotions. So this is a process that you repeat for every swing trade. No difference. Hope that helped, and we'll see you next time.